Hello everyone, and welcome to this month's expatriation video. I've been doing one of these every month so far this year in 2025, and it's kind of fun. Today I want to talk about a really basic topic in expatriation. What is an expatriate for tax purposes? In the common meaning, expatriate is used to mean a person who lives outside their native country. This is often used for U.S. citizens living abroad, and you might see the word expats thrown around. Expat communities, especially online, you'll see expat communities, people, using these ways to connect with each other. But under the tax meaning, expatriate is a very different term. Under Internal Revenue Code Section 877 Cap A G2, it's any U.S. citizen who relinquishes his citizenship and any long-term resident of the United States who ceases to be a lawful permanent resident of the U.S. So, for citizens, we kind of know if we're U.S. citizens usually. And if you have any questions about your U.S. citizenship status, you should probably talk to an immigration lawyer to find out if you're a U.S. citizen or not. Long-term resident is something that's defined in the tax code. This isn't an immigration term, it's a tax term. And this is someone who has had a green card for enough time. Once you've had your green card for enough time, you're a long-term resident within the tax meaning. And then when you terminate your green card, that would make you an expatriate. So a green card, that means lawful permanent resident status. That's how people typically use the word green card. And how much time, this is in 8 or more of the last 15 years. Now, in is not the same word as for. So when you see in, think during. And this is really important for understanding the tax code to try to make distinctions like this. Little words like this can make a really big difference. Let's take a look at the actual definition. This is defined in the old section 877E2. This is any individual other than a citizen of the United States who is a lawful permanent resident of the United States in at least 8 taxable years during the period of 15 taxable years ending with the taxable year during which the individual ceases to be a lawful permanent resident. So in plain English, green card holders who had the green card during 8 or more of the last 15 years. This means that you could have the green card for only 1 day during a calendar year, and that would count as during the year or in the year. So let's say you get your green card on December 30th of a year. That means that year counts as 1 year towards the test. The most common expatriation events that I see, and there's others, the tax code defines various things that could be expatriation events, but the most common ones that I see over and over: renouncing United States nationality before a diplomatic or consular officer of the United States, filing Form I-407 to abandon lawful permanent resident status, or making a treaty election under the tiebreaker rules of a treaty with the United States. This is something that green card holders only can use. Citizens cannot elect to be taxed as a resident of another country under a U.S. tax treaty. And this treaty election expatriation works only after long-term resident status has been achieved. What I mean by that, this is just a word of caution for the treaty election expatriation. If you use a treaty election to elect a resident of another country under the resident tiebreaker rules, if you do that before you've reached long-term resident status, then all it does is it removes that year from the 8-year count, assuming the treaty election covers the entire calendar year. But if you do a treaty election, the same exact type of treaty election, after long-term resident status is reached, then that's an expatriation event, and it could trigger exit tax if you're a covered expatriate. So this is something that you want to be very, very careful with if you're a green card holder and considering making this type of treaty election. You don't want to accidentally expatriate. What is not an expatriation for tax purposes is a U.S. citizen living abroad. That's the common meaning of expat that you see used all the time. An expired green card, merely allowing your green card to expire, is not an expatriation event, and you remain taxable on your worldwide income until you actually formally terminate the green card. Relinquishing a green card if long-term resident status is not achieved. So if you've had the green card in less than 8 of the last 15 years and you're not yet a long-term resident, you can simply relinquish your green card using Form I-407, and then you change status, you become a non-resident of the US, but you don't have an expatriation event, you're not an expatriate, and you don't need to worry about paying exit tax. Also not an expatriation event is any other resident alien who becomes a non-resident alien, because only US citizens and long-term residents can become expatriates. Now here's a graph to help show how this works. First, you have to be the right type of person. Only a citizen or a lawful permanent resident who's had the green card long enough to be a long-term resident. Only one of those two. And then you have an expatriation event, and that's either renouncing citizenship in front of a consular officer, or filing I-407, or making the treaty election, or some other less common stuff that's in the code. And that makes you an expatriate. So all that stuff in the blue box is what we're covering today. And then after you're an expatriate, there's some other stuff to look at, or after you know you're going to be an expatriate, there's some other stuff to look at. You have to check whether you meet the tests for covered expatriate status, and if you're not a covered expatriate, there's no exit tax, and if you are a covered expatriate, you might be paying exit tax. One thing that's common to all expatriates is Form 8854. This is required to report expatriation events to the IRS and for certain annual reporting related to expatriation items. So when you fill out this form, you report whether you're covered, and there's a bunch of lines where you fill in information about that specifically. You show the details of how you computed your net worth. You show the details of various exit tax items if you're covered. There's a page for reporting deferred exit tax if you're covered and if you elect to defer your exit tax. And then a page for reporting certain distributions to covered expatriates. Here is a snapshot of just the top of page 1 of Form 8854, so you can see what it looks like. And again, this form is only required for expatriates. So if you merely change from resident to non-resident and you were not a long-term resident and you were not a citizen and you didn't terminate that status, then this form does not apply to you. This is only for expatriates. And you can see here, this is just the top of page 1 information, and it asks you for information about what type of expatriate you were and when you had various different statuses and when they ended, and this is your form if you're an expatriate. Now, the consequences of late filing or not filing. Notice 2009-85 says that if you do not file this form, you'll be covered even if you are otherwise not covered. So you should file this form if you're an expatriate, especially if you're a non-covered expatriate, because that'll make you covered if you don't. And you should file it if you're a covered expatriate, because you need to report your information. There's a $10,000 penalty for filing late. Personally have not yet seen that assessed, but haven't really filed a late 8854 also. Now, on Form 8854, There are it's an one-time filing for the year of expatriation, and then in certain situations you may have to file it on an annual basis as well. All expatriates have to file Form 8854 for the year of expatriation, and you'll fill out Parts 1 and Part 2. And there's annual filing only for covered expatriates who receive distributions from non-grantor trusts or eligible deferred compensation, or if they had deferred their exit tax at the time of expatriation. And if you fit one of those situations, you'll be filling out Parts 1 and Part 3. There's a second copy that must be mailed to an Austin, Texas address in the Form 8854 instructions if it's filed with a tax return. And if you have to file Form 8854 but no tax return is required, then you just send the one copy of 8854 to Austin, Texas address. The first copy, in the case where you're filing an income tax return, the first copy gets attached to your tax return. So that's pretty much it for today. Just wanted to go over these very basic topics. If you have any questions about this or about expatriation, feel free to reach me here. Thank you for listening, and I'll see you next month.